Okay. Welcome, everyone. My name is Jen Hicks. I'm the Director of Communications and Outreach for Maine Woodland Owners. Maine Woodland Owners is a statewide organization that's been around for over 45 years. And its mission is to provide the support and resources that Maine Woodland owners need to successfully manage healthy forests for the state. Tonight, we are very lucky to have our good friend, Jim Norris. He is a retired, as you can see, a retired IRS forester. It's a very rare career. There's very few of those. How many IRS foresters can you just count them on one hand, Jim? Are they that rare?
When I started with the IRS, there were 36. There's one now. And that involved, I'll be getting into a little bit of the reason why during the presentation.
Yeah. So it's a very he's very specialized. This is an area that he knows well, and it's incredibly useful for our members and woodland owners friends that rely on our programs and our newsletter. Tonight will be a 2-hour program. And Jim's going to go through the major content around this particular topic. It's going to be a lot of information, and he's also very happy to answer questions as we go along, as he goes along, because it's easier to do it that way than to wait to the very end to start asking the questions that might pertain to something he talked about an hour earlier. So for us to do that, everybody can do one of 3 things to get my attention and to get questions out to Jim. One can be you can leave your video on, and you can literally raise your hand if you have a question. My job will be to monitor all the videos, all the participants, to see if I can see people with their hands up. If you would rather keep your video off, that's just fine. You can send your questions using chat. I see that most people have figured out how to use the chat. So go ahead and send those questions, and I'll interrupt Jim when they come through, and I'll read them out and he can answer them. The third is, I believe, I don't have this on my view, but at the bottom, I believe there's or if you mouse over your name on the participant list, I believe you have the option to click on raise hand. There's a little icon, but I could be wrong about that. So this is the one thing I'm not 100% sure. So if you click on your raised hand icon, a blue hand will appear next to your name, and then I will know that you want my attention or Jim's attention, and he can answer your question. And I will unmute you, or you unmute yourself, and then you can ask the question. My preference and what I've seen work best is to have that person who's asking the question to ask it verbally, so that it's clear and that Jim can respond in the best way possible. So, but if you'd rather send a typed question, I'll give you the option to, would you like to read the question out to Jim or whatever? So we'll figure it out. We've done plenty of this, so you have just some patience, but overall, this should be a very useful program for everyone, and I'm hoping that you'll get a lot out of it. And I'm just trying to think. We will be taking a break. Jim's going to find a good place to stop so everybody can get up and stretch and do what they need to do for 5 minutes to then get back into the next part of the program. So, and he will be using the slideshow. So you'll see a lot of content. Again, this will be recorded so you can review it at a later time. And Jim, do you expect to have some follow-up handouts to everybody? If it turns out that there is some follow-up to this program afterwards, I have everybody's email address, and I'll go ahead and connect you with the resources or connect you with Jim. And I'm quite sure that Jim would be happy to have you follow up with him with a question that didn't get answered at tonight's program.
Again, depending on the extent or the nature of the follow-up, if it's, a few minutes to answer a question about a form or whatever, but if it's going to require a significant amount of my time, I am a timber tax consultant and no longer work for the IRS and charge nominal fees for my services. So
So yeah, so that's definitely been an option. And Jim, you've had a few folks from these types of programs follow up with you
I'm
and
sure
retain
a
your
few of my
services.
clients are on the call now, but
Oh, okay.
okay.
That's good. That's a good sign.
Yep.
Okay, so thank you everyone for being here, and I'm going to go ahead and turn my video off, but I'll be keeping track of everybody and with questions and comments, and I'm going to pass it over to you, Jim.
Thank you. Well, as Jen said, I'm a retired IRS forester. I've been retired for 5 years. I worked for 32 years for the IRS and worked for the state of Maine for 9 years before that in not the same capacity, but a similar capacity. So I've spent my entire career in property tax and income taxes. As indicated earlier, IRS foresters are generally involved in examining large forest products companies, which is where I spent most of my time. Those were much higher priorities, bigger risks, more difficulty. I wish I had spent more time with the kinds of owners that are involved with Maine woodlands and otherwise. But so I live in Winthrop. I like to fish, hunt, golf, all those outdoor things, and have my own woodlot. Been actively managing it. Grew Christmas trees for almost 20 years. It was hard to be a small Christmas tree owner. So anyway, we'll get going. I wanted to show you a publication. It's listed there. I'll put it on the screen here. It doesn't show well, but it's the Forest Landowner's Guide to the Federal Income Tax. It's a great publication. I have pirated, with their permission, key elements from the document. You can get this document on electronically or electronically in print from the timbertax.org website. There's updated information from the U.S. Forest Service and elsewhere. So one thing that's significant when it comes to forest income tax is very similar to any kind of income tax. It's the nature of the ownership and the type of operation you have, and including the purpose for holding timber. It can be for personal use. It can be for investment, which is what most of us are. Most of us hope to, in addition to enjoying our property and putting our heart and soul, I think Larry Beauregard has a personal relationship with every tree on his woodlot, as do many Maine woodland owners. But the investment scenario suggests that we hope to realize some income from our property during the course of our ownership, and hope that that continues even beyond our ownership. I've got to do a change here, there, okay. And then, of course, there's the possibility of wanting to operate our woodlots as a business. I said earlier that it's very difficult to be a small Christmas tree grower with expenses and insurance and taxes and so forth. But it's also the same thing for anyone trying or choosing to try to operate as a business and file a Schedule C. Many landowners with a four-wheel drive pickup truck and a chainsaw have attempted to secure significant benefits from being a business and not made the grade because there are some limitations that separate those of us who have a hobby from a business, those of us who are investors rather than actual business owners. That doesn't mean that you can't have more than one business. You can in fact operate as a wage earner and have a separate business or two. It's pretty common. Personal use is just as this slide says, you don't own the property to produce any income as an investor or as a business. And, you know, it might be your house lot with a few trees out back. And then of course, as an investor, you manage the property for eventual realization of a profit, but it's not your principal purpose in owning the property. Business you've entered into to carry on the management of the property primarily for a profit. Sometimes that can be, you know, a 50-50 split for some. Your activity's regular. That's a very significant feature of determining whether or not you're operating as a business, how active you are and how you participate. An active business interest is one that you materially participate in, whether it's overseeing your forester, paying the property taxes or otherwise. Historically, the IRS and Congress ran into trouble with businesses and created some passive loss rules back along where high wealth individuals were owning forest land or all sorts of rental properties and so forth, just to potentially create losses against their high income. So there has to be some sort of material interest. And as I said, their passive interest is one which you don't really do anything. You might be the major stakeholder in terms of original investment in the business. Business, again, presumes that the activities carried on to produce income, and the law talks about at least 3 or 5 of the consecutive years ending with the current year. So that's a brief outline in regards to business. We'll get into some of those kinds of costs, but the important element to the whole forest income tax are making sure you understand the difference between the types of costs you incur. Capital costs are just what it says, where you create a capital asset or you purchase a capital asset. Other types of costs are some deductible expenses that you can, in fact, potentially deduct if you're a business, or you could capitalize them into the cost of your land and or timber. Costs, I'm having a little trouble here with I'm using the scroll on my mouse, so I apologize for the flitting. Costs of sale are, you know, if you hire a forester to oversee your timber sale, the cost of that forester is a direct offset to your overall gain in order to get to your net gain on a sale. Cost basis is just what it basically says is what did you pay? What do you have for a purchase price, including the price of the land and timber, legal expenses, other types of costs that were directly associated with it. And of course, as you'll see, one of the most difficult parts is how we allocate that original cost into the respective assets. It's a little easier with a straightforward woodlot where you have simply a woodlot with land and timber. Purchased assets, your purchase price, an inherited asset. I'll explain a little more about that. Assets that you got by gift, and of course, how you allocate your original basis. Capital costs are costs that cannot be deducted from income in the year they occur because, and generally speaking, capital costs for timber are capitalized into a depletion account and recovered as you sell timber. If in fact you have machinery and equipment or buildings and so forth, if you're a business, you have the ability to deduct those costs through depreciation versus depletion. Capitalizing costs is a capitalization process. You might be acquiring real property, you might be acquiring equipment, you might be making improvements to assets that already exist on the property. Sometimes TSI, timber stand improvement activity, can be considered a capital cost where you're adding value to that. If you have no other means of deducting that cost, i.e. a business, it's obviously important, and that those costs can be directly included in your cost basis for the timber versus the land. You purchase land, timber, buildings, all sorts of machinery and equipment. Other types of costs that may be depreciable to somebody in a business would be, bridges, roads, culverts, fire breaks, and whatever. But for most of us investors, some of those costs are able to be capitalized and prorated based on what asset they serve. Obviously, site preparation, if you were doing some planning, tree planting and equipment, road costs, I'm going to get into depreciable and non-depreciable costs. I spend a considerable amount of time involved with analyzing road costs and determining whether or not they were properly assignable as a land improvement and recovered only when you sell the property, or if they're able to be added, for instance, to the cost of your timber, or written off directly as a cost of making a sale, that you needed that road to harvest the timber. Generally speaking, that becomes a direct expense against the timber sale. I've already covered those purchased assets, the total cost of the acquisition, including legal fees, reforestation. Obviously, we don't have an awful lot of that here in Maine, but reforestation is a capital cost where you're purchasing. If you inherit an asset, some timberland, the basis of that to you, otherwise your cost basis, is in fact the fair market value of that property, including all the assets. That's known as stepping up the basis in, an inherited asset. It's, as of the date of death or an alternate valuation date that that is available when it comes to estate and gift taxes. The cost basis for assets received by a gift is the adjusted basis of the person who made the gift. So sometimes there's a process of trying to avoid inheritance taxes and other sorts of assignments to making a transfer. But if a property's been held for a long time, the cost basis when they got it in 1950 is going to be much different than today. So that that donor's cost basis becomes your cost basis if you're the grantee. Bargain sale is when you pay it's sold for less than its fair market value, and the difference between the price paid and by the buyer and the fair market value is deemed to be a gift for income tax purposes, if in fact the donor or the seller has the right set of tax circumstances. Some of my lingo, by the way, I'm an IRS forester, not an IRS revenue agent or accountant. So if there's, I pray there's no IRS folks here, and if there are outside accountants, just bear with me. So the one of the most difficult elements in this whole process of forest income tax is how do you allocate the original, your original cost, price paid and so forth, to the various assets that were involved, especially if you paid something other than fair market value. But if the property's complex, for instance, it has lake frontage, road frontage, buildings, garages, swampland, agricultural land, timberland, and so on, somehow you need to, whether it's getting professional help, doing the best you can with property tax records that may be helpful, but that's a real difficult process in some cases. This example that shows here is just that, if you bought for something for a property for less than fair market value, you assign the purchase price based on the proportion of fair market value that your cost basis has. And I'm not going to spend a lot of time right there. Generally speaking, am I going too fast for everybody? I'm going to get into what I think most everybody's interested in, and that's setting up the depletion accounts and properly reporting the sale. I've got some examples. So
Jim, why don't we see if anybody needs a slowdown or a review of anything? Everybody all set? Those who I see video, thumbs up.
okay, well,
Great.
so as we said, you when you purchase property or you receive it, there are different elements, different assets. You get land, and so if you properly create an account so that you can prove that you've assigned costs to the appropriate assets that exist. These are the types of accounts you would tend to get involved with. In our case, are you able to see my cursor?
Yes.
Yep.
Okay, well, the timber account is, generally speaking, what we're most concerned with, and the proper allocation of the price between timber and land becomes very significant. And the land account has a number of different types of assets. The land itself, non-depreciable land improvements are land improvements that involve earthwork that's permanent, whether they were there when you purchased the property or later. And I'm talking in many cases about roads, for instance. That's the most common non-depreciable land improvement. And I'm not necessarily talking about a skid road, but I'm talking about a road that likely to be used over the ownership. Many times the cost of short-term skid roads and whatever may actually show up as somehow netting out in the price that you're going to receive for timber, or it's a relatively minor cost compared to other more significant improvements. But it's not a wasting asset. Generally, the road, any work that's done on, for instance, the road, are depreciable land improvements. And we're talking these that I'm describing here. But again, in order to expense some of these assets, it's necessary that you're considered a business owner. The all-important timber account. Merchantable timber is what the depletion account is attempting to allow you to recover the cost in. And that's as opposed to non-merchantable timber, i.e. young growth. Here in the state of Maine, unlike especially down south, it's not particularly significant because reforestation, people, when they're buying property, make no attempt unless there's an important reason, to determine what's pre-merchantable versus what's merchantable. There are just timber inventory estimates that describe what you have for timber assets. Plantations are a different thing. Down south, it's a big deal. And when you capitalize costs for a plantation, it goes into a pre-merchantable account. And after a fixed period of time down south, say 20, 25 years, you can roll it into your depletion account. But it's merchantable timber that we're looking at and attempting to recover when we actually sell timber. Time has changed, the forest industry's changed, but in merchantable timber, you might describe what you have either in cords, 1,000 board feet, tons, and perhaps even some others. But, where cords seem to be slipping by the wayside, a lot of the purchases are strictly in tons now, especially if there's some lower value products biomass and otherwise. Obviously, most of the high value timber is in fact measured in a board feet using different log rules. And so I said lowest common denominator here. I think we're going to talk a little more about it, but my goal many times is to try to simplify as much as can be expected. The units that you're going to deplete, hardwood pulp, hardwood log, softwood pulp, is it really necessary? And do you have the resources and the information to actually make that? What that means is you'd have to convert cords to tons, or tons to 1,000 board feet, or cords to it's a relatively simple, straightforward process. There are historic tables and current utilization tables that allow you to do it. Equipment accounts, we're gonna pass along on that for obvious reasons. As I said earlier, it pertains mostly to small business owners. If there is anybody in the audience who really wants to get into detail, feel that this is an area they want to pursue, I'm more than happy to spend some time with you individually. But I'm going to primarily focus on our timber depletion scenarios. Certain types of costs that you incur that might be expensed if you're a forest business, but likely to be capitalized into accounts that allow you to recover at least a prorated portion of it as you deplete timber. Here's a bunch of those costs that are you may or may not have involved in the management of your woodlot. And as you can see, not all of those costs, not all of the entire costs that are involved in these activities necessarily are assignable to timber. It's to your advantage to push the envelope, if you will, to, if you're making allocations, to allocate it as strong and as heavy to timber versus land as possible. There are other types of costs that are carrying charges that, again, you might be involved in property taxes, insurance, those types that if you're not deducting those costs as in itemized deductions because you live on your woodlot, you should strongly consider some sort of prorated allocation to the timber component of your property. It will add to the cost basis to be recovered and minimize your gain on potential sales. And you do it, again, I'm spending a little bit too much, a lot of time with operating expenses in the business, but again, those are costs that are considered ordinary and necessary, and they generally don't have a lot of benefit beyond the current year. And here's if in fact you are pursuing that, you can see outlined in red here, the hobby loss rules talk about actively participating with the expectation of a profit. But if there are any of you who are attempting to pursue, a business application, sometimes it's very difficult with relatively small woodlots to generate profits on a regular basis. Maybe it's only once, but if a lot of your activity is conducted to increase the value of the final product, those kinds of costs may be considered expensible, and it's a very difficult thing because most IRS agents don't really understand that concept, that sometimes the work you're doing is you're not receiving an immediate benefit, but the benefit is down the road. You're doing or hiring TSI work or thinning and so forth. I talked about carrying charges the way you can capitalize taxes and interest and other expenses that relate to the development and operation of the forest property. And I'm going to move along here. At the time I put this together, it seemed like there was a lot of interest, but most of the time it's not been significant. And I think I've already kind of touched on the kinds of things that you're allowed to capitalize that are expenses. As I said earlier, if you're an active business, forest management expenses are fully deductible. If it's a passive business, it's questionable. We've already talked about the kinds of expenses that are involved in that are ordinary and necessary timber management expenses, as opposed to your hobby costs, for instance. There is a provision, however, in the law that if you're an investment owner, those kinds of management expenses that we talked about right here, if you incur those costs, you're allowed to deduct those costs, a portion of those costs that exceeds 2% of your adjusted gross income. For a lot of people that are investors, that's a pretty substantial amount. But there are folks who obviously get in a position of that. Okay, let's talk about the whole income scenario. Timber sale receipts are obviously what you receive from the sale of the timber. What is your gain on the sale of the timber, which is your gross proceeds less your cost basis? Also, the costs of sale, which I described earlier, which are generally involved, hiring a forester, maybe putting a new road in to actually get to that wood that you're not going to be using again. And obviously your adjusted basis is significant. It's an element of the depletion that we're going to talk about. We're going to talk about how you recover your cost basis, and that basis in timber. The sale of timber represents the sale of a capital asset, and there are significant benefits You've held it for a long time. Congress and historically has felt that that's an important benefit. Corporate interests lost that benefit in 1986. That's when there were 36 IRS foresters before that. And that was the primary job, is to look at the sale of timber to oneself if you're a corporate taxpayer. How long have you owned the property? You have to own the timber or the property for at least a year. Your purpose in owning it. Are you, is it inventory, or are you an investor? Might decide whether or not it's actually a sale of a capital asset. How did you dispose of it? Did you sell it on the stump? Did you cut it and haul it roadside? And did you make a lump sum sale? Did you sell it on a pay as cut basis? And so deciding whether or not it's a capital asset sale is significant. I already talked to you a little bit about the costs of making the sale that are directly reduce your gain in order to get to a net capital gain. I'm going to spend a little bit of time right now on government program payments. Some of you may be well aware that in particular, NRCS payments, cost share payments for conservation related activities may be excludable from income. You obviously go through an application process. There are a number of categories that tend to qualify in this area, and should it all occur, you would receive a 1099-G from the government entity if in fact those payments, I think, exceed like $600. The determination of whether or not that income must be reported, as I said here, it's difficult in some cases, but Congress felt that this was a reasonable process for you to have the ability to exclude from income, as long as you don't double dip and try to, either capitalize that cost or expense it as it occurs. But again, once you get to 1099, you got to make that decision. And what, if any, of that is going to be reported in income or excluded from income? These are a few of the types of programs. You probably, a lot of you are familiar with EQIP, WIP, other types of FLEP and SIP and WIP and TIP. A lot of these acronyms are, and there are certain state programs that are involved. One of the, I'm not going to spend time here tonight going through the actual computation of what's excludable, but Congress did not want somebody to have this benefit as a windfall to their activity. So a process, section 126 is the provision in the IRS code that talks about these certain cost share payments and which ones might be deductible, excludable from income and how you do it. I don't particularly like it. That's why I'm skimming through here. But as you can see, it's a multiple step process. I believe it's outdated and particularly difficult to do. And generally speaking, it's been a process where a lot of the owners that I'm aware of have just simply said, I'm going to exclude it all, or I'm not going to exclude any. Some elements of this computation process, as I said earlier, don't reflect current market conditions and vary from year to year. So I'm more than happy to help somebody with this process. I know that I don't believe that NRCS gets actively involved in assisting in that. If somebody has different experience that way, please share that with us. But information returns, if you purchase standing timber, i.e. logger, or if in fact you're a consulting forester who actually buys timber, you're required to file a 1099-S. And the reason for that is that you're likely going to claim an expense for that purchase. And this legitimizes that purchase. The IRS could double check to see that somebody actually reported that income as income to them and an expense to the purchaser of the timber. This is differentiated from a 1099 miscellaneous. Now, this is a very, very important distinction, and I urge everybody to pay careful attention. When you get a 1099, if you got a 1099-S, proceeds from a real estate transaction, or in this case, timber, it's differentiated from a 1099 miscellaneous, which is income from for services. One of them is capital, one of them is ordinary. And I have found over time that many accountants may not, especially mom and pop types, might not spend the time to make sure that you got the proper 1099. Some of the loggers are not well known for their record keeping abilities, and you might not even get a 1099, but you might get the wrong one. And so when it comes time for filing your tax return, the income from the sale of timber, getting capital gains treatment is a pretty big deal. So pay careful attention to that. And also remember that most of the tax software that's out there, whether it's TurboTax or others, generally only asks you if you have some 1099s. They don't see sales of timber as a regular process. And it's pretty easy for you to report the timber sale just as a 1099 and get taxed as ordinary income. Your record keeping systems are important. It's the best you can do with what you have. And looking at income, ordinary income can be taxed at much higher rates. There are currently, I lose a lot of clients right here, but there are exclusion provisions, and I use the term exclusion. I'm not sure it's not stated that way in the IRS code, which is code section 1. I just put this together. These are tax rates for long-term capital gains. If you look at the this area right here, if your filing status is single and your adjusted gross income is $40,000 or less, your capital gain income, net capital gain, is taxed at 0. That's because you're in the 2 lowest tax brackets. If you file a joint return and your joint return income, adjusted income, bottom of the first page, top of the second, is $80,000 or less, the income tax, the tax rate on the capital gains portion is 0. I'm going to, well, I'm not, I guess I won't. There's a provision, there's a portion of the instruction sheet on the 1040s. I want to make sure I get to the depletion stuff here. Where you, if you're doing your own tax return by hand, it combines separates your income and applies the appropriate tax rate, and then that's blended together to give you an effective rate to be applied against your total income. So it's usually in the low 40s on the page number on the instruction sheet. It does work. You don't necessarily know it if you do use income tax software. You know, stumpage is the sale of standing timber. Generally speaking, for income tax purposes, or specifically, it's called 631B sale. You retain ownership of the timber until you actually sell it. And by selling it, when the purchaser severs the tree, that tree is no longer a capital asset, but it was a capital asset in your hands. Any value that's added to that severed tree becomes subject to ordinary ordinary income tax rates and provisions. I actually have a number of clients that that are in a business where they get both capital and ordinary income. But I also have a number of clients that harvest their own timber, generally selling it roadside. So they have both capital gains and ordinary income. Yes, Jen?
I was just wondering if we had a good time to take a break.
I'm having so much fun. I had no idea what time it was.
You've done great.
It's fine with me. If want to take a 5-minute.
Were you finished the slide?
Yes.
Well, why don't we quickly see if anybody had a question before we went to take a break. So if you wanted to unmute yourself and go ahead and ask your question, anybody?
Don't tell me everybody left.
No, they're all here. So far, so good, John. Okay, good. Thanks. Okay. Jim, I was also thinking that I know people are coming to this presentation with their own questions or particular situations.
Right.
So maybe we come back from our break, we'll have people go. I don't know if this is going to mess up your flow, but maybe have people go quickly saying why they're at this meeting or what they might want to get, if they haven't already gotten the information there.
If you'd like to do a sample of that, you're certainly welcome.
Yeah. Okay, why don't we take a 6-minute break? some reason that sounds right to me. So
Okay.
6 minutes, and we'll be back. So that will get us here 6:04, according to my clock.
Okay.
Let's say 6:05, just to make it clean. So we'll be back here in 6 or so minutes. Okay, thanks.
Uh, 2 hours total. I'm doing it.
I'm back if anybody does have a question.
Jim,
Yes, ma'am.
can you hear me?
I can.
Oh, good. I had a logging this past fall. It was my second one, not this year, but 12 years ago. And my property was inherited. My father, it was a tree farm. He's had 3 different loggings, and then he gave everything to me. I did receive a 1099-S, and I do use the farm Schedule F every year through my taxes for
Yep.
expenses.
Yep.
And your explanation there, you have a capital gain and ordinary income. Well, I'm still working. So even though I'm 70, I'm full-time, I have to claim not only the capital gain and the 1099, but also my income.
That's correct.
Was this that 1099 it is correct with an S? That's what I received.
Did you say S as in Sam?
Sam, yes.
Yeah, that's
Okay.
appropriate.
Okay. Okay, no, this is, I've kept all my records. It is a working tree farm.
Mhm.
And I just wanted to be sure that I covered every avenue as I file the taxes. I don't have that many expenses. Yes, I have my tractors, we have trails, roads, but I've also had USDA come in to do my management plan a few years ago,
Yes.
which they also helped me with a lot of the culverts replacement. You're talking roadways. We
Yeah.
just had a lot of habitat cut, but now this coming spring, it will be the invasive, and they will be paying for that. But that's where I was confused when you talked about some of these government programs. That's income because they're paying for that to be done. But it's also taking care of promoting more growth, obviously, on my lots, my wood lot.
Yes. So, as I said a little earlier, this is kind of an exception to the rule.
Okay.
The excluding certain government cost sharing payments that are, mom and pop generally accepted as being beneficial from income. not necessarily in their entirety, but that if you go through the process that I went over rather quickly, you may find that some or all of that is exempt or excludable. And if you find that, you've got to make sure that you don't claim those same costs as an expense on your Schedule F,
Right,
or capitalize those costs at all. You
okay.
can't have it both ways.
Okay, when this happened, the first part were some culverts and a Swedish bed. They had to put the Swedish bed in because it was near the river.
Mhm.
And I paid the contractor, obviously, to do it, and then they reimbursed what was appropriate. It still was, I didn't gain anything, obviously, but it also helped the woodlot tremendously.
Yeah.
It was an expense. The next phase is now the logger, when they were here, they also cleared cut a few acres as required for habitat. And I did receive a check in January of this year, but I didn't have to pay anything, obviously. So that's going to be income.
Well, I was hoping not to really get into the weeds, but NRCS sets up cost payments that
Right.
historically have been a portion of what it actually costs to do it.
Mhm.
They study, what it costs to do.
Right.
And, ideally, that is in the 50% area, but that generally is not how it seems to be working now. And depending on what you can do with contractors and others, it may be that cost share payment covers the entire cost or nearly all of it.
Well, it was the loggers that did it while they were here logging.
Yeah.
Okay, and then the invasive, I will be paying for the invasive, but then I'm going to be reimbursed, but not as the full cost, obviously.
Right.
So
I mean,
that will be, and we need it desperately here.
Yeah, well, as do I and many other people.
Oh, it's horrible. Yeah,
But again, the original purpose behind this was to share it as I
correct.
share in the costs of these. very
Exactly.
important.
Exactly.
So generally speaking, it's understood that those are going to be something less than your total cost.
Well, I am so grateful because it would have cost a lot to have this, a lot of this work done. I'm just so, it's great. I don't care how much the invasive have to go. And even though I get a little, at least it will be taken care of.
Yeah, you have to stay at it. I
Yeah.
have to every year do those kinds of activities.
Yeah, I'm out there all the time doing it.
Okay, Jen?
Diane, thanks for sharing your question with us. Yeah, let's, are you getting ahead there?
I just took a quick look at what's
Yeah.
to come.
Let's just go really quick. Maybe I'll start with Larry since I'm looking at him. Larry, did you want to just say real quickly where you already told us where you're calling from, but what you're looking to do, and you're muted right now, so you'll need to unmute. There you go.
Well, I think part of my question was just answered by what Jim was talking about with the lady who just asked the question, and that is I'm receiving NRCS support for some of the activities that are going on. And my question really was, how do I approach that from the tax basis? And I think you've kind of alluded to it, that it's not an easy process, and I'll have to talk to my tax people to be able to figure that out.
Well, they don't deal with it very often. And, you mentioned basis, Larry.
Mhm.
The gal mentioned that the cost she gets, if it doesn't cover the entire cost, and the money you get, you exclude, but you still have out-of-pocket costs, those
Mhm.
costs can be capitalized into your timber or land accounts in proportion to their value. So,
Yep. Mhm. Now, somebody just mentioned too, the use of the Form F.
yeah.
Is that something you should submit every year or just when you do a harvest?
No, a Form F is like a Schedule C for farmers.
Mhm.
It's a business component of the business expenses and income, as
Mhm.
opposed to a Schedule Form T that we're all familiar with, or hope are familiar with.
Mhm.
So it's not filed unless you're claiming farm expenses.
Okay. Mhm.
Who else would like to share their, what they might be looking for tonight? You can go ahead and just unmute and go ahead. I do have I do have a comment from Scott. If my accountant is not familiar with timber tax laws, can you suggest one in the central Maine area?
There aren't any. I'm being a little facetious. You know what? I have a number of clients where I interface with their accountant. Yes, it's a little more expensive, but I find that most of them, even experienced, solid accountants, deal with timber sales so rarely and timber activities that they don't really have a handle on how to accomplish some of these activities efficiently. Um, it's just not a regular part of their activity. This person, I can help them find someone, and my contact information, I'll ask them to call me or email me. When we're done here, I'll give that, and I might be able to give them some suggestions, but I'm trying to keep careful that I'm not necessarily sponsoring any accountant or tax preparation people.
Anybody else want to jump in?
Yes, one of the reasons I was interested, this is Bruce.
Hi, Bruce.
Up here in Dover, Foxcroft, I bought a 40 acres from my folks years ago. They financed it, and I'm assuming that interest and everything could all be rolled into the basis. I've never ever done it, but I've got, and then I added another roughly 20 acres probably 10 years after that. So, but I've never really ever established a basis for the thing. So that should be a pretty interesting project.
Yeah, that's, I'm more than happy to spend either briefly or in more detailed time with you, but we don't have quite enough time to really get into it. The answer to your first question is, a prorated portion of that is, if you've never deducted any of those costs, could still be capitalized as if they had, because you've never taken them. So, but again, if you get my contact information, we can, gauge whether or not it's beneficial for you to have me spend some time. That's a very difficult, there's lots of rules of thumb, a little bit of guessing. It's a bit of an art. It's not a science because of lack of information like inventories and historical records. So
I sort of went through a little of that a couple of years ago when my mom died, and we had to deal with what little bit of estate she had left still. But the other thing that I'm a little interested in sorting out too is my last harvest was in 2004, And I'm having a fairly significant one this year, partly because it's the ice storm in May, and the one this fall pretty much flattened a lot of my spindly hardwoods and spruce. And so I'm assuming that I'm kind of interested in finding out if there's ways of spreading this this income out a little bit, or do you deal with that in the depletion?
Well, yeah, I mean, you're clearly a cash taxpayer, not an accrual taxpayer.
Yeah.
So it's
Yeah.
when the income is actually received. And so if it's clearly in your best interest to do that, minimize income at any particular time, you know, a lot of people do get income in because of winter harvesting, you know, in one year and the next. So if you can wait and that's still important to you, that's a real possibility.
Great.
But you know, perhaps you and I can have a conversation subsequent to this, and I'm a little more comfortable spending. Larry, I wished I had what you just had. I don't know if
So why don't we go ahead and we'll
Okay.
get back to checking in with people in a
Okay.
bit. Jim, why don't you get back into your presentation and we'll go. from
okay,
there.
you know, I'm going to do a little bit more general discussion before we deal with some individual situations reporting timber sale. And as I said earlier, a lot of people deduct their property taxes on their as an itemized deduction, or put into timber basis a pro rata share of the property tax into the depletion portion of their cost basis. Reforestation, we don't see it very often, but remember that a timber casualty loss is an actual loss that's available. I dealt with some major court cases with large taxpayers regarding timber casualty losses because they occurred on a broad basis with lots and lots of timber, whether it was windstorms, spruce budworm, fire, and a timber casualty loss, the amount of it is the smaller of the fair market value of the loss or the timber basis. There are some real nuances to this, and I'm not going to get into them because you end up looking at not on an individual tree, not generally on an individual stand. If it's the property, when you're determining the fair market value of the loss, it's of what's the difference in fair market value of the 100 acres before and after the blowdown. Sometimes it's not recognizable. And then you compare that to the cost basis of what was blown down. And, there's some real nuances there that require considerable time. All right, now we're really here to the guts, and this is Form T, as in timber. I'm going to stop sharing the PowerPoint and get to an actual situation. One of my clients, so if you bear with me, I think I know how to do this.
Hey, while you're doing that, Jim, there's a quick question. Is there an income level where the revenue from a harvest is not taxable? Was it about 76,000 jointly?
Hold on here. Jen, I just did something I didn't mean to.
Okay.
I stopped sharing the screen and I lost the. let me
So
see.
what you do is click on share screen again, and then you'll be
Oh,
able,
I can't get to that. Oh, okay, now I'm with. All right, here we go. Now I'm gonna share the screen for, here we go. All right. The question again,
is there an income level where the revenue from a harvest is not taxable? Was it about 76,000 jointly?
well, that if they're filing jointly and included the adjusted gross income is $80,000 or less, including the capital gain income, net capital gain income. The tax rate on the capital gain portion is 0. And it brings up an interesting question. It's possible that in computing the capital gain, they might choose not to claim any cost basis. Simply because if the tax rate is 0, whether it's $10,000 of net income or $20,000 of net income, you might want to save your cost basis for another sale when your income situation might be different. But you do not have to claim cost basis. Matter of fact, I would say the majority of timber sales that occur in the state of Maine by small owners, people do not claim cost basis because their accountants have no idea what to do and may feel that it's not worthwhile. So I'm going to move on here. This is a spreadsheet. It's an element of a Form T, and you'll see getting a little, I'll show you, but I'm talking about the allocation of a property acquired by inheritance in 2015. And they made a 2018 timber sale. Okay. This is somewhat typical. Generally speaking, there's a bigger difference between a lot of these, time. So there's not much time elapsed between the acquisition by inheritance, which means that the cost basis is the fair market value. Another helpful, but not always usual element of this is the fact that this taxpayer had an inventory. In this particular case, it was Paul Larrabee, formerly with Sappi Forestry, who had provided this service associated with the timber sale. So I had the good fortune of having a pretty detailed timber inventory. That's not always the case. And so many times I have to guesstimate based on industry standards, ownership standards that Maine Forest Service and others promulgate. We might say that there was 15 cords an acre average stocking, and the timber grew at 3% a year in trying to establish this. So what you see here is a 2018 timber inventory. And it's both in terms of saw timber and pulp. It was distinguished. And as a matter of fact, it got refined to the point where there was very detailed information about each of the species within those products. Many times when we're doing this, I will combine them all. This was done this way because the timber sale was going to involve a lot of saw timber, okay? And it was a saw timber lot, I guess. I mean, if you look, I say not a saw timber lot, but if you are going to be cutting the high value products sooner, your cost basis can be recovered quicker if you treat it and don't blend it, blend these two inventory volumes together. Because look at the price difference over here. So in order to do this, that was a 2018 timber inventory. I had to grow the timber back to 2015, which was the acquisition date. And then I went to Maine Forest Service historic stumpage prices, and I valued that timber as of 2015, because we're not talking, we have to go back to the date of acquisition. And you can see I did that for both of these. You're going to see it later on, but once I grew it back and valued it, I also had to grow it back to the current time using the original cost, but adding growth for the 3 years that occurred in the interim. I'll show you that on the next section. And the timber prices in this particular case were prices that Paul Larrabee provided, but I use Maine Forest Service, generally speaking, their historic prices, because it's neutral and because they're a respected source. Not that Paul isn't, but so what I end up having to do is allocate purchase price. I've done this all on an Excel spreadsheet, which makes it pretty easy to link certain elements together. And generally speaking, my math computations are accurate rather than not. So the timber valuation, the timber volume, if you look at the 230,000 feet, it was derived from information right there. See the 230? I'm having trouble switching from cell to cell here. And it may well be part of the fact that I'm sharing it.
Yeah,
But
that's it.
anyway, pardon me?
Yeah, I think that's the problem. You really
Yep.
can't.
I can't manipulate the spreadsheet, but the point is, once I had this inventory, I used the inventory, grew it back, and carried it to the actual allocation. So I had this much pulp, I had this much saw timber, its value was this, this times this equals this, and I had already done the calculation up here. And so with a spreadsheet, I was able to just link, this equals this, and not have to do any work. And this whole spreadsheet flows from one section to another. So I was able to determine that the whole value was $80,000. And I did it in this particular case by determining what I knew, which was the timber valuation. I felt fairly comfortable based on that. And the excess, the residual, was the value of the timber. This isn't always the practice, but in this particular case, I felt that was good. So that's why it all adds up to $80,000 to the nearest dollar. Otherwise, I backed into that price. It was this minus this minus this. So the actual timber sale itself was a timber, again, Paul Larrabee had information. It was a $35,000 timber sale. And I knew what was sold because of all the scale slips that were provided to the landowner. You could see by product and by category what was sold, and it all added up to the 35,000 and change. I'm changing the picture here. I don't know if you can see what, Jen, can they see me moving the pictures?
No.
Okay, so I'm moving it so I can go to the right side of this spreadsheet where I computed what was actually sold. I combined these products, and we're going to need that information when we compute depletion. And it will automatically be transferred to the next element in this. All right, so I guess what I'm going to have to do, Jen, I thought it worked this way. If I can't manipulate this, I'm going to have to stop sharing the screen, open the file, and go to the next sheet, correct?
Yes, yes.
I want to show them. It shouldn't take me very long, folks. Just sit tight.
Yep. It's easy enough to do that.
Okay. All right, help me, Jen.
Go back to share. Well, first of all, get your document the way you want it. So if you want to click on the tab first.
I did.
Okay.
The document is where I want it. I
Okay,
want to
and go back to share.
What's that?
Click on share screen.
I don't have the menu now.
You just
hold
mouse
on.
over at the bottom of your screen.
Oh, okay. It was okay.
Yeah. You see it?
No. There's the two horizontal arrows. There's a little bit of, there's no labels on these. I can't see them real well.
You know what the share screen button looks like. So
Yeah, it's not there.
Yeah.
All I have now is just the okay, I think I'm okay, here we go. All right. It was hidden. All right, I'm going to share the screen. Now I'm going back to the. All right, here we go. Sorry, folks. If you look at this sheet, this is part one of a Form T, as in timber. And what I've created is a working spreadsheet that is identical. Well, it's a facsimile of an IRS form called Form T, which is an information report that it's very helpful if you are claiming capital gains treatment and you claiming cost basis against the sale. This form, if it looks like an IRS form, it's clearly going to be helpful if you are in a process of defending it. This part is a formal representation of the acquisition. As you can see, it was the same information I had there. I put down that it was by inheritance so that the IRS knew, and that it occurred in 2015. I also explained that they paid $79,000 for the property and had $1,000 in legal expenses, so that there was an $80,000 total purchase price. The information contained here is simply accessing the information I already generated, and I'm not able to show you what's in the cells on here, but I've simply going back and picking it off my allocation work and transferring it here with a simple spreadsheet maneuver. And so that my saw timber and saw log volume and pulpwood volumes are shown, and my $80,000. So, oh, hold it. It worked that time. I'm sorry. The next part of part 2 of a Form T is this is the actual depletion schedule. This is where, if you look here, because I separated this between logs and pulp, this is what I started with a quantity in 2015 in terms of quantity and cost of those two product categories. Now, 3 years occurred, so I have to add growth. I did it at 2%. This has an effect of reducing your depletion rate. So the fact that I did it is significant. Whether or not it's 2, 1.5, or 4 is debatable. So in both cases, I added to the denominator of a depletion fraction the amount of growth that occurred. And so then that at the start of the year of 2018, I had 244 instead of 230, and my cost basis remained the same. So if you divide the cost you have by the volume you have, I have this taxpayer had $176.40 per 1,000 board feet of logs at the start of the year. During the year, they sold 156,000 feet. So I multiplied 176 times 156 and got $27,000. That's going to be used in the next part of the computation because that's the cost basis they're going to claim. So this worksheet's great because then using a spreadsheet, I subtract the 156 from the 244 and get 87. So that's what's left in the 87,000 feet of saw logs in the depletion account and $15,000. So the next time that if we're doing this for the next year, I do have for other clients multiple spreadsheets, so they're all linked and they can do it. But this is for description purposes. But these two balances right here would become the starting balances for the next year. So, you know, the advantage of doing this is you have a pretty good permanent record and you have the ability to add, in addition to growth, you could add in excuse me, any sort of volumes or costs. And this, you keep running totals. This was done, the pulp side was done the same way. But so then to complete this, you got the part 3 of this Form T, the profit and loss from the sale. So again, it's the same identification information, 2018 sale, $35,000 timber sale. And I put in here because of a 1099-S that was provided by SAPI. So total sales price was $35,200. Excuse me. So this particular part of the form is for reporting the actual gain, the sale and gain. So you reported 156,000 board feet at 176. This is to determine the cost basis. I'm sorry. This was the income. This part is, see where it says here, cost basis. So we didn't sell any land or other assets. We sold timber, merchantable timber. We sold 156 and 313. These, you can pick these right off the, oh, it's working now. If you look up here and see my formula bar, I went to part 2 on the depletion schedule, line E23, to get this number. I didn't have to recompute anything. And the same here, I picked this off the depletion schedule. And then this is just multiplying one by the other. And these 3 spreadsheets were all linked. So, you know, once you do the original allocation, all you're really adding in is the timber sale and letting the spread. I like this because it lets the spreadsheet do it. And then we had $5,000 in costs. There was $28,000 in basis. So, you know, the gain was only a $1,400 gain. And, you know, the reason for that is it was only 3 years, okay? And, you know, there could have actually been a loss down here. You know, if timber sales, the bottom dropped out of the market, which, you know, when you buy, it's a point in time. It's not an automatic appreciation in value, just like with homes or anything else. So if only 3 years had occurred, it's not totally unrealistic that there be that kind of small gain. Clearly, if this had been a 30-year-old purchase, that gain would have been far more substantial because the cost basis would have been much, much less compared to the actual sales price. I hope that makes some sense. So anyway, that's a fairly typical one. I'm going to go and stop sharing, and I'm going to show you a simplified approach that I use for some taxpayers. There we go. Okay. I'm going to share screen. I'm going to still coming. Okay. All right. What you see here, I call it a simplified timber sale approach. This is somewhat unique to me. I've run this by the IRS a number of times.
Jim, we're seeing your folder. We're not seeing a document.
Really?
So unshare and try it again.
Let's see here. Simplified sale. What do you see now? Just me?
Yeah, I mean, we haven't seen a shared screen yet.
Okay. All right, now I'm gonna share screen again. And I'm going to go to here. I'm going to go to the simplified.
You got to open it before you share the screen because it's not going to show.
Okay.
So do it again.
Sorry, folks. All right, so I'm going to open it.
Jim, I can open it from my end.
Okay.
You want me to do that?
Yeah.
I got it here. Let me do that.
You're not seeing it now?
Let me see. Nope. So unshare.
Yep.
Can you see it?
No, just a. Okay. Does everybody else see it?
Okay.
Yes.
Larry's nodding his head. Thumbs up from Larry.
Okay. All right. What you see here, I'm sorry, folks. Probably should have practiced this a little more. I've been in a lot of Zooms, but I'm just a watcher instead of a presenter. I use this technique, this particular spreadsheet, because the client, this happened to be a client of mine, and they made a timber sale, and it was likely going to be the only timber sale they ever make. They had no records, no timber inventory, no allocation of a purchase price, although the property was just a woodlot. It had land and timber. It was clear from looking at the town tax records that there was likely, they'd never made a timber sale. There was likely plenty of cost basis for a timber in timber. So what I really essentially did in here is I just simply compared, this was a 1985 acquisition, okay? You'll see a bigger difference between cost and sale. I just simply said that the only way I can really ballpark this and do something acceptable to the IRS, assuming they haven't made timber sales, and I'm pretty comfortable that they actually had cost basis in timber, is I made a relationship between 1985 and 2018 sale. I did have some reasonably detailed information from, in this case, it was Two Trees Forestry in Winthrop. So I ended up looking at, Jen, can you scroll down just a little so I can show this? There, okay. I ended up looking at 1985 and 2018 prices for the predominant activity that was, I happen to know that was in the sale, I did have scale slips, and I determined the relationship between 1985 and 2018 when it came to stumpage prices. And I weighted, these are essentially average these prices for those products and species. And now scroll back up, you see that 74%, right? If you go up to the next, keep going. No, the other way. There we go. See this? Can you see my cursor? On the 74? Okay.
No,
So,
so I
so
can do
what I
it.
did was I used that relationship. So I took the stumpage price, which was 3,100. I took 74% of it and got 2,300. I made an adjustment for growth because there was growth that occurred in that period of time that had no cost basis. I believe that's an appropriate adjustment. And I got the 1985 cost basis, which was 1,200. I subtracted the forester's cost and I got the capital gain. So the 85 cost basis was 1,200 compared to the 3,100 original sales price. And so they ended up with a $1,300 gain. I've done some variations off this depending, but if you don't have any records to go for them, admittedly, I understand what the IRS tends to expect and not expect. But you just try to do the best you can with what you have. And whether it's this sophisticated, I don't think this is sophisticated, but it's too bad not to have any cost basis against a sale, especially if it's the only sale you make. And the IRS, believe it or not, can be reasonable. And like I said, I've run this by this particular approach. And it does, I usually send there's another attachment to this where I list all the facts, everything that I assumed, blank, blank, blank. And it's an accompanying Word document. So if you say what you did, how you did it, you really put the IRS in a position of saying, well, I don't know what we can do that's any better than that. And not everything lends itself to determination to the nearest 6 decimal places. Sometimes the accuracy to the nearest whole number is sufficient. And, lastly, when it comes to this, this is what IRS calls a timing adjustment. You have just so much cost basis, okay? In this case, we really didn't know exactly what his cost basis was, and we made a trade-off. But in the earlier case, we knew how much cost basis there was. If I had exaggerated that and he recovered too much cost basis in that year, he's only got a certain amount left. So, pay me now, pay me later. And therefore, the IRS, generally speaking, doesn't lose as much sleep over it as they would if you were claiming multiple exemptions and credits and so forth. It's called a timing adjustment. So, I have a number of other things, but we're nearing the end, and I'd like to get some questions if they have it. So,
There is one question from Scott. So my gain is not necessarily the amount of my 1099 for stumpage?
that's correct.
Okay.
However, if, as I stated earlier, if you have not determined your cost basis, you know, the 1099 is your gain. And the whole point behind determining cost basis is to get your net gain, not your gross gain. I mean, it's still a good deal for you because it's a capital asset sale, but you know, the whole element, the fundamental here is to make sure that you get your cost basis and pay no more than you absolutely have to in establishing what you're going to report for income.
Well, let's open it up now, if that's okay with you, Jim.
Oh, absolutely.
All right. Here's a question from John. John, did you want to go ahead and read your question to Jim? Go right ahead. John, did you want to ask Jim the question? I'll go ahead. My management plan has me cutting about every 10 years. It takes 2 to 3 seasons each time. Should I be waiting until cut time to do road culvert work? Oh, he doesn't have a mic. Sorry, John. I didn't catch that.
Oh, he said, never mind.
No,
Oh,
no, he has no mic. That's why he couldn't ask it himself. So management plan has him cutting every 10 years. It takes 2 to 3 seasons each time. Should I be waiting until cut time to do road culvert work in order to deduct the expenses of road?
Well, generally speaking, you know, most people don't, unless you have other reasons, don't incur those costs until just preceding, for instance, or during the timber harvest, so you don't run into trouble with, you know, claiming expenses against the sale that you incurred, you know, 5 years earlier. I think that although a lot of Maine woodland owners and small woodlot people are very diligent, very competent, thoughtful, brave, clean, and reverent, they want to do everything right and do it timely, so there's no guesswork at the end. But you could run into some difficulties with saying were those costs absolutely necessary at that time, knowing that you may or you might not actually have a harvest. So I think you would, as far as them being considered part of the sale, you're on relatively thin ice doing them way ahead of time. If in fact some of those costs you were going to try to deduct as a cost of sale, as opposed to capitalizing them into a timber or land account. I hope that generally answers.
Sounds like that's what he was thinking. That's what I figured. Who else out there? And if you don't have a mic, that's fine. Just go ahead and type it. Or just go ahead and unmute yourself and jump in.
If there's nobody coming up, oh, go ahead.
If you're anticipating a sale and say you've already bought the property, you know what your purchase price and everything is. Let's say you have a timber cruise to establish your basis, then you have to do a little surveying work. If this is done a year or two before the sale, is this going to be a problem from what you were just saying?
No, it sounds to me, you know, 1 or 2 versus 5, or this is Dave, right?
Yeah,
That's right.
Yeah, I thought he might be an antagonist tonight, but he's being good about it. If those costs were absolutely necessary, or you could make an argument that you had to do them then because, you could, that's when you could get the contractor, or that's when you could get the surveyor, or or the forester. I don't think it's going to be a problem. And again, if those were necessary costs, in the opinion of your forester, that to make this sale, and they generally had to occur because of the sale, then I think you'll be able to sit on them for a year or two and deduct them against the sales price. Is that kind of where you were going, Dave?
Did you hear my question?
I did. I didn't. Did you have a follow-up to the original question?
Yes, the property was purchased last year.
Yeah.
You did a timber cruise this year because you learned that you could go through this depletion thing and save
Yeah.
some money on taxes.
Yeah.
At the same time, you had to patch up a few property lines. They're not really part of the original purchase price, but they are related to the sale, especially property line maintenance.
Yes. The inventory, don't mute your mic, Dave. The inventory has more than just the benefit of the timber sale. I mean, there is a lasting benefit beyond, unless you did an inventory of a portion of the property that you're likely cutting. The other costs you described certainly seem to be appropriate and directly related to the sale. And, the one concept that comes into play, I said earlier, is that you don't want to pay any more tax than you absolutely have to. And you need to look yourself in the mirror and say, was I reasonable? Was I aggressive? I have every right to be aggressive to pursue those costs, and knowing full well that if somebody challenges it in the IRS, for instance, and they have to make an argument as to why those weren't necessary costs, and they'll have a difficult time, especially given if it's professional management, like yourself as a consulting forester dealing with a landowner, as opposed to perhaps the landowner himself.
Thank you.
So, Jen, I'm going to wrap some things up here.
Sure.
Just a couple more parting reminders. 1099-S, not a 1099 miscellaneous. Very, very important. The capital gain exclusion. If your adjusted gross income is less than $80,000, including the capital gain portion, the tax rate on a joint return on the capital gain portion is zero. So if something looks funny in the end, that could be it. And those numbers are half, 40,000 for a single taxpayer. Those two pieces are very, very important. They can simplify this whole process. The other thing is records. As I said earlier, if you document everything you did, it may not be perfect, but you can't let perfect get in the way of good when it comes to this. And I think you'll find that the IRS does recognize there are limitations. You know, what you can expend. If you have a $5,000 timber sale, they don't expect you to spend $8,000 to prove it. So, you know, those are just a couple highlights that I think are very significant and might save you a lot of time and trouble. So,
Great.
can I, my phone number, I'm retired and, you know, I care deeply about the organization and I'm prepared to spend time with folks. My phone number, cell phone number is 207-215-7576. If it's an out of state or if it's a lot of numbers and I don't recognize it, leave a message because of those damn robocalls. And my email address is jimnorris1650@gmail.com. And I'll be more than happy to try to help you either informally or professionally. I don't know what else to say.
Right. I'm wondering if it's useful for us for me to send some of those spreadsheets out to this group as a follow-up, or is that too confusing?
This is not privileged. I would prefer to do that myself
Okay.
so that I can explain it. One problem, as those of you who work with spreadsheets know, that if you send out an unprotected spreadsheet, or if you don't convert the spreadsheet to a PDF, you could blame me for miscalculation because you were using my spreadsheet. I mean, I've tried very hard to keep this simple. I've shared it, especially with a lot of foresters. I'm retired. This is all not a big money maker. So I'm more than happy to share it as long as I'm comfortable that you know how to use it. So, and Scott Fawcett, you're welcome.
Okay, that sounds good. Everybody knows how to get in touch with me. If you didn't catch Jim's email, although I'm now thinking I'll go ahead and send a follow-up email to everybody with your phone number and email.
Don't contact me at 7 o'clock tomorrow morning because I'm getting my COVID shot.
Right.
Okay.
And I know firsthand that if he comes by to work with you, if it ever comes to that, he'll bring you donuts, I think. Is that how that works, Jim?
That happens. I live near Lakeside Orchard, which has apple cider donuts. So
It's a good deal. Well, thank you everyone for attending. I see if I'm seeing familiar names and faces, and I do appreciate the interest that everybody has in our programs, and I'm hoping it's a useful opportunity. Please be in touch if you have any other questions. And Jim, Les, you look like you're about to say something.
we're going to do this again, right?
Yeah, that's right. We do have a March event. It's in the March newsletter. Let me see if I can pull this up really fast. March
4th, I think.
Oh, March 16th. Tuesday. It'll be on a Tuesday night. So if you have any, you realize you had some things you wanted to ask, you can come to that one. So thank you for your time, and be safe, everyone, and we'll hopefully see you soon. Next week is Planned Giving, Leaving, Building a Legacy workshop with Bangor Savings Bank Vice President of Wealth Management. So if you're interested in that way, another tax saving opportunity and supporting your favorite charity, that's a very good program to be part of. So register for that if you're interested. Okay, everybody have a great night. Thank you.
Bye now.
Bye-bye.
See you, Larry.